G'day traders, Mindset Reset. It's Thursday, day 2 on the backside of the week. Now, we haven't done the Mindset Reset for a week or so. We've been focusing more on the technical videos, and today we're going to answer some specific questions. We're going to talk about a couple of important things in terms of process. There's been a lot of questions that kind of deviate away from understanding what we're actually doing here. And of course, I'm going to congratulate a lot of traders on potentially what has been so far a very big start to 2025 and March, already offering traders some very, very scalable trade setup opportunities. Now, first things first, let's just talk about Mindset Reset. The whole point of the Mindset Reset is to keep your head focused on the modus operandi of the game. The name of the game is rinse and repeat, scalable 90-10 trade setup opportunities. Now, the playbook focuses on signal days, first red day setups, first green day setups, inside day signals, 3 days of breakout traders. Obviously, we've got our first bounce, first bar, news catalyst opportunities. We've covered that in detail, but understanding the importance of aligning ourselves with a higher time frame setup, regardless if that's a reversal trade or a trend trade. Now, what's really important to understand about discretionary trading? So understand you're not a quantitative trader. You're not running EAs. If you want a certain type of expectancy, get an automated trading system. What I mean by that is this: if you're looking for a printout with an expectancy, get an automated trading system. Work on creating an automated trading system that you can run on multiple markets, but also potentially developing multiple automated systems that can run through all market conditions so that your systems are running continuously, and at the end of the month, end of the week, whatever, you can run a certain degree of expectancy based on how good your system is. Now, in discretionary trading, the whole understanding behind discretionary trading is that you yourself are taking the discretion. You're the one making the decisions. So a discretionary trader, like I have talked about my own process over time, learning, making all the mistakes possible, but then understanding the real realization is when you understand you make a lot of money on the days and the setups where it's really easy to make a lot of money. And that means focusing on finding those setups that repeat on any instrument, not trying to trade a market every day or go to a market and what's my thesis to take trades. I'm looking for the same setups, same Monday to Wednesday, Friday template, easy money-making setups on any instrument when they show up. Now, in the ACB Masterclass, we talked about one specific setup on one day of the week. The basic model is one specific setup on one particular day of the week. That's where it all starts from. That's the setup that I've shown my sons, and that's all they're looking for based on how markets close on a Wednesday. Just as an example, when we talk about discretionary trading, we can have 100 traders, and every single day this week, somebody's had it's an ACB. This is an ACB. They had an ACB in Asia, an ACB in London on Tuesday. And again, I repeat that an ACB, a true ACB template, is a 3-session setup with a hold till close template. That's the whole idea behind the ACB trade setup, is that my son takes a position, he puts a stop in place, he moves his position to break even once it clears a certain level, and then he walks away from the screen. And the reason why that is that that's a setup that should go to the close. And I don't want my son trying to figure anything out or to trade a market or to learn more so he can take more trades, learn premiums, learn discounts, learn sweeps, learn hunts, learn soups, count pushes, look at little bars. I'll repeat this on those setups, just like every other single setup when it presents in the timing window after any major red news or anything else, is taking a position, not counting little bars, taking a position, putting a stop in place to manage the risk of that position, having a level to either go to break even on or a range expansion or a level to take profits from, predetermined before you even take the trade. You don't make decisions on the fly. You have a trading plan and you're looking for the same trades over and over again, which brings me to the next point today, is that the process does a few things. So number one, you have to know the setup that you're actually looking for, whether that's in a first red day template. So before Go back and look at the first new section in the course. And on the channel, I've gone over multiple videos now of breaking the higher time frame down. Now, when you break the higher time frame down and you understand the open, low, high close, open, high, low close, first red day, first green day, monthly cycles, and also months that are in trading ranges, you'll understand when higher time frame levels are triggered or broken through. Now, the understanding of that allows you to carry that thesis forward Monday, Wednesday, Friday templates, hunting parabolic 90-10 setups. So number one, what signal will bring an instrument? So write this down. What signal brings an instrument up for tomorrow on your watch list so that you can see how it sets up on the day in the session that you're trading? What signal, number one, brings an instrument up onto your watch list? Number two, what instruments are in your watch list? So I talk about a basic model, a basic basket. My sons have 10 instruments. Now, my main thrust, and I've repeated this, is gold, silver, the Dow, and NASDAQ. Now, I look for specific setups on natural gas and oil, pretty much only one specific setup on those instruments. Currencies, indexes, metals, I'm looking for a couple of different types of setups, but mainly when there's a simple model, or if I am only looking for one trade, everything breaks down, no matter what setup it is, into two types of templates on the day, whether they're A top reversals, V bottom reversals, whether they're trend trades, whether they're sideways coil reversals, sideways coil trend trades, pump and dump, dump and pump. That's it. So there's only two types of trades that you can take, a trend trade or a reversal trade. Now, there are only three things that you can do on any given day. Only three things. You can either buy, you can sell, or you can do nothing at all. So when traders are looking for trades and they're trying to trade markets, the difference with that is this. I'm looking for setups where I can't lose. And I repeat this again, stop taking losing trades. And until that penny really hits you, you'll still go there every day looking for trades. You got 10 screens open. You're looking to take trades when you should be able to narrow things down. So answering a question, how do you pick which instrument you're going to trade on the day? And literally, I just make a decision. Pick one, shut everything else off. It doesn't matter. Pick one and then execute that setup as flawlessly as possible. Win, lose, or draw, accept the outcome. And that's all you can do. If your skills dictate and you've got the experience, the knowledge, you can manage maybe two trades at once, or you can maybe have one in the first hour, you might have one third hour, whatever that is. You make that decision and you pre-plan it, and then you're ready at showtime to perform. So when you're trading, and if you're trading at size, or you're actually planning on trading at size, shut everything else off and get really focused. Traders have all kinds of social media on. Traders want to open up another Discord community and a Telegram, and they've got chat boxes going, and they're in other live streams. And I have to ask, what are you doing? What are you doing? Are you running a trading business, or are you in a social networking get-together? So when you're trading, you should be super focused. So number one, you've got your watch list. You've got 2 or 3 instruments that have come up on your watch list. Today's a great example. The yen pairs came up on several watch lists because they closed in breakout at the highest closing price of the week, or in breakout. And a lot of those moved in the end of the Asian window. And as one trader commented, how can you call that a setup when it's not in the timing window? And my response to that is this. It may not be in your timing window, but it's in the Asian session. And all that is a 1 hour, 2 hour, 3 hour consolidation, high of the week. Aussie yen was a great example. It broke out again, the classic breakout again, triggering new breakouts, breaking down, coiling sideways. And you know what? I'm sorry that it was 45 minutes later than what your timing window was, but for Asian session traders who were hunting the day 2 reversal On the backside of the week, that was a scalable free cash Thursday trade setup. So you have to know exactly what you're hunting, and it may go first hour, it may go third hour. Nothing is guaranteed, but you have to know exactly what you're hunting and how you're going to execute and manage your risk, lock in your profits, and understand if it happens in Asia that most likely it's a nail and bail. Meaning, that doesn't mean, as one trader said, oh, the nail and bails are garbage. And a nail and bail can still be an all-in opportunity. It just may come back later in the day, especially if we have PPI on the schedule or anything else. If it's a 3-session US session setup and the market coils after major red news, chances are it may be an ACB, as we saw in gold, because it's going to the close. It's Thursday, day 2 on the backside of the week. Go back and study the templates that I put up, Monday, Wednesday, Friday templates. Day 2 on the front side typically expands the range. We can look for reversals on day 2 on the backside, but if it's a trend trade setup coiling sideways underneath the all-time highs, why are you looking to counter trend it when it's a trend trade setup for the ACB on gold? Great trade taken by several traders in the community today. So my first point was you need to know exactly what you are looking for each week, whether it can be both first red day, first green day, which instrument shows up on your watch list, which one sets up on the day. You may get only one or the other. Now, secondly, you have to have a basket of instruments that are going to reflect those opportunities. So certain instruments are going to offer more volatility. Certain instruments are going to offer certain scalable setups more frequently than other ones. Simple basket, a couple metals, a couple indexes, 6 currency pairs. There are 6 instruments, and you're only looking for 1, 2, or maybe even 3 scalable opportunities in the week. 2 or 3 scalable opportunities are better than 1 or 10, 50, 50, I caught the high, I caught the low trades, which aren't scalable. They're often not easy to hold on to. They're not rinse and repeat in the sense that, you may be trying to catch the high on a market that's trending and continues to go higher. Now, I'm looking for trades where the easy money, the higher time frames are driving those moves. If a market's moving higher on the higher time frame, why don't you look for a low of day buy, a counter trend reversal buy in a market that continues to trend higher? These are all the things that you have to decide. Now, number 1, knowing what setup you're hunting, because number 2, then the signal that will bring those instruments up for the next day in your session to potentially offer you the best trade candidate setup. Number 3, having a basket of instruments that will reflect those opportunities frequently enough and that are scalable that you get those 2 to 3 signals a week throughout the month. And number 4, understanding the different types of variables and how those setups can present so that you know and understand how to execute them in live time. But the simple model is this: don't trade in front of major red news. Don't try to catch highs and catch lows. You don't have to catch the high or catch the low. Once that market coils, our universal entry criteria in the playbook setups is page 29 in the playbook. The ACB masterclass, the coil that traders are hunting, if you're patient and you wait and understand time rotation, it's entry, stop loss, break even level, and take profits. That is it. There is nothing else. There's so much overcomplication that's been done by people, and nowhere in either the playbook or the masterclass is that complicated. Entry, stop loss, take profit levels, and then walking away. Now here's number 5, sitting on your hands and doing nothing else in between except studying or figuring out how to trade those setups or scale those setups bigger over time. Now I'm hunting out setups where we've got asymmetrical risk reward. That's the whole point behind the playbook setups, is asymmetrical risk reward. That is the whole point behind the ACB masterclass. Asymmetrical risk reward. And on those ACB setups, they're 10 to 1. 10 to 1. Currencies, indexes, metals, energies, the same. When we get our 3-session setup, they are 10 to 1 opportunities, minimum. So when that penny drops, you sit there and you go, well, why am I trying to catch highs and get 1 to 1? Now, okay, we have our nail and bails, our bread and butter money, but recognizing that's what it is. Execution's the same. Entry, stop loss, take profits, and walk away, so that we're not engaging in emotional, irrational, impulsive, self-sabotaging behavior, trading, taking more trades at lunchtime and then later in the day at the close and in the open and the gap and everything else. Okay, that's your choice how you trade. You can do that. I'm looking for rinse and repeat scalable opportunities, trading less on higher probability setups that offer me higher asymmetrical risk reward that I can continue to increase and scale up in size. And that's the whole point. There's nothing complicated about it. Simple, repeatable, and scalable. No science projects. I'm not trying to figure out how the algo works or how smart I want to prove how smart I am or anything else. Rinse and repeat, dump and pump and dump. And as I've demonstrated, I drew out that simple setup. That's all I'm looking for. Pump, coil, and dump. Pump, coil, dump, coil, and pump. Entry, stop loss. If I'm scaling in, I literally am scaling in with multiple positions. I may take some out at a break-even level. Once I move all those positions to break even, taking some off to get paid and literally walking away, or having a measured move target in place and extracting the majority of that off the table. And if there's a runner or I put a smaller position in, leaving that to go. That's an individual decision depending on the type of template and setup that we're trading in. So that's the basics. The process is the number one thing. Looking for trades or looking for a signal service or anything else means you're not actually discretion. You're looking for someone to do the heavy lifting for you. You're looking for someone to do the work for you. Show me the trade. Show me a trade today. That's not what we're here for. The traders that are here are looking to develop their trading business and the skills and the knowledge to shape around whatever setups they decide that they're going to trade to grow their trading business on. And that's it. And regardless of how you trade, even if you are only looking at one or two instruments, you should still have a reason that will help you identify what setup they're going to potentially set up into, if at all. It's not, and if you're just taking trades, that's entirely up to you. That is not my approach. I have zero interest in trying to take trades, zero interest in trying to catch highs or catch lows or, catch a move or get in, get out. I'm looking for the pump and dump and pump, whether that's a session trade or a 5-star ACB setup. Next week, the same setups are going to show up probably on the same days on different instruments. So let that sink in. And as my friend Steven constantly tells me, round kick, because that's all it is. One kick 10,000 times, not 10,000 kicks as many times as we can to try and catch moves. The same setups where I can make the most money on over and over and over again. And as long as you can sit on your hands and not do any damage, who can stop you? Nobody. Nobody can stop you. No furus, no opinions, nothing matters. You don't care. Stick to the same setups that you make a lot of money on and laugh at everything else and ignore it. Like I told my son today, don't get elated. Don't get depressed. Keep an even keel. Stay focused on the process. Next Wednesday, do the exact same thing. Find the instruments that show up on your watch list. And then when you come to the screen for the US window, which ones have potentially maybe already left the station? So the N pair has left the station. I wasn't interested. I'm not interested in chasing currency pairs for low-hanging fruit unless we have a large range day that they haven't broken levels yet. That's a possibility if nothing else is set up. But they're looking for one specific setup, one day of the week, and that's it. And if that setup doesn't show up on their watch list or on the day, they do not trade. They don't trade in front of CPI, or they don't try to catch highs. They don't do anything else. They have one setup that they look for: entry, stop loss, break even level, and they walk away. And sometimes, they may have a market that comes back and they get stopped out with less profits. But it doesn't matter. Right now, all they know is one setup, and it's about the process. Rinse and repeat on the process, day in and day out. And unless you master that, you will constantly go to the screen looking for trades. And I refer to those as 30-70 trades. I don't care how good people get at them over the long term, 30-70, and very unlikely to be scaled up in size. Now, you don't have to trade the same setups, but you need to have an edge that you can scale up in size, that's easy to identify, that shows up frequently enough that you can trade it on a regular basis, rinse and repeat. So keep it simple, traders. It is simple, but go back, listen to this video, understand the steps. What signal will bring an instrument up onto your watch list? What setup are you hunting that you have to have the signal for? We talked about that in the last few videos. Go back and review that, but you should have a watch list every single day, even if you're only following one or two instruments. You should be able to know what's going to be the signal for you to know whether that market is about to set up and how should it set up in the timing window. How should price behave? How am I going to execute that? And once I'm in that market, how should it behave? It should be moving almost immediately in your favor. Managing your risk, break-even level, if indeed there is one, where you're going to take profits, whether that's hold till close or a range expansion measured target or a level. And then once that trade is done, whether you trade one or two is up to you, locking in the money and walking away. There is nothing else more complicated. If you think there is, it's in your head, and you've got to sort that out. The more specific you get, the more certainty you develop about your approach, your trading plan, your trading setups, your routine, your process, your daily routine, your headspace, your mindset, your beliefs, and your ability to execute and walk away and stay to that plan and not do other degenerate, gambling, impulsive, irrational, damaging, self-sabotaging things outside of that plan. You can scale that business up as big as you want. Have a great day, traders, and may the markets go with you.